This is your LMAX Exchange technical update for Friday, July 14th, 2017. Euro dollar. So the euro did stall out this week just ahead of 115, with the market trading back down below 114. But while the market holds above last week's low at 113.13 on a daily close basis, the pressure still remains firmly on the top side, and there's risk for a push through that 115 barrier into this critical resistance zone in the 115 to 117 area. If we look back to 2015, the market has been in this range since 2015, and although the uptrend has been intense in 2017, we're coming up into this range resistance, which the market could find some really good resistance into. But again, on a short-term basis, there is still upside potential here while the market holds above 113.13 for a little bit more push into this range, into this 115 to 117 area. So that's the key focus right now, 113.13 below. While we hold above that level on a close basis, there's risk for additional upside. Initial resistance once we take out 115 comes in around a measured move extension at 115.70. Sterling dollar. So cable continues to chop around since putting in a 2017 high several weeks back in May at 130.48. Since then, it's been a little bit of up and down, and the market has been holding close to that high but hasn't been able to establish above it. Overall, the breakout in April above a critical resistance, range resistance at 127.75 set the stage for a longer-term reversal and a base by that plus 30-year low from October at 118.40. But again, once we see this breakout, it's a longer term breakout, and it does take time for the market to adjust before pushing up. When it does push up, that extension is exposed at 135 further up, so that's the next key target. But again, a lot of choppy price action could still ensue before the market finally decides to extend up towards 135. Any setbacks that we do see should be very well supported now ahead of 125. Dollar yen. So dollar yen continues to adhere to a range trade over the past several weeks, and although the market did trade up above 114, we had talked about the market potentially stalling out in this area ahead of a resumption of declines back down towards those range lows, which come in around the 2017 low just ahead of 108. It would take a break all the way back above that high that we saw back in March, on March 10th at 115.50, to suggest that the market is ready for a more significant bullish breakout. Euro Swiss. So this week's break above 110 in Euro Swiss was significant, and it sets the stage for a retest of critical resistance in the form of that 2016 high at 112. At this point, it would take a breakdown back below recent support around 108.30 to take the immediate pressure off the top side. Aussie dollar. So the Australian dollar has been very well bid, and the market now is coming back into some longer term resistance up towards 78. We have the 2017 high, which is a stone's throw away from being tested, and a break above there exposes the longer term resistance in the 78 area. A clear break above 78 would be a major development for this market, suggesting a bullish structural shift on a medium to longer term basis, while inability to establish above 78 will keep this longer term range trade intact, with the market potentially stalling out and rolling back over significantly in the weeks ahead towards the 70 area. So we're at this key inflection point again with Aussie dollar, where the market is up above 77 and looking to test that critical range resistance at 78. Dollar CAD. So dollar CAD has broken down, extending its declines to fresh 2017 lows, already seeing a plus 10 big figure move since putting in a 2017 high back in May. This sets the stage now for fresh downside over the coming sessions to ultimately test that 2016 base, which comes in at 24.61. At this point, it would take a break all the way back above 130.15, the previous weekly high, to take the immediate pressure off the downside. Kiwi dollar. So the New Zealand dollar continues to be very well supported on dips, and the market is now coming up into some critical resistance here into the 74 to 75 area. Overall, going back several months, the market has been very well capped into rallies up towards 75, and so it'll be interesting to see if we see the same type of price action and a rejection off these current levels up here in favor of a resumption of that range trade back down towards and below the 70 handle. Overall, right now, the focus is on that 2016 2017 a high above. That high comes in at 73.76 going back to February 7th. A clear break above there could suggest a structural shift, a bullish structural shift on a longer term basis, but inability to establish above there will put the focus back on the downside. A break now back below 72, however, would be required to strengthen the bearish outlook and accelerate declines. SPX 500. The S&P 500 continues with its bullish pace after the market had consolidated off recent record highs just over 2450. The market looks to be poised for an extension to fresh record highs now towards a measured move extension, which comes in at 2480. That's an 80-point measured move extension following an 80-point consolidation earlier this year between 2400 and 2320. Only a breakdown below 2400 would now take the pressure off the top side. Gold. So gold continues to show signs of being very well supported on dips over the past several months, though we did see a recent breakdown below some key previous higher low support at 1214, which could compromise this more constructive outlook for gold. The market now would need to establish back above recent resistance at 1230 to suggest that the pressure is firmly back on the top side, and the market is now focused on retesting that 2017 high up just shy of 1300. If on the other hand the market breaks down below 1200, it could open the door for a more significant bearish resumption, exposing a drop well below 1200 and into the 1100s.